He became a millionaire in his young age of 30 years old, and he became a billionaire in his 50s. Today we are going to talk about the investment strategy that made Warren Buffett his first $1 million. Welcome to Ask Dr. Wealth series. I'm Alvin, the founder of Dr. Wealth. So as you know, Warren Buffett is one of the most revered investors in the world, and everybody talks about him, and of course we have to cover about him as well. And little did people know that he became a millionaire in his young age of 30 years old, and he became a billionaire in his 50s. Okay, and a lot of investors who try to emulate his investing strategies are looking at the current Warren Buffett now, where he is at a billionaire status. So when he was a millionaire, he was investing very differently when he was a billionaire. So in other words, in terms of individual context, right, I would think that following the investment strategy that Buffett used to get his first million would make a lot more sense for the average guy rather than following his investment strategy when he's in his billionaire status. Alright? In his millionaire status, what he did, right, was to invest using this strategy called net strategy. So this strategy, he didn't develop it. It was actually learned from his teacher, Benjamin Graham. Okay, and essentially this net strategy is using this formula. Okay, I won't go in depth into it, but I'll just write it here so you can do further research if you want to understand this strategy further. Essentially, Graham was saying that if the stock price of a counter is less than 2/3 of the difference between the current asset and the total liabilities, of course divided by the number of shares to get a per share value, if you have fulfilled this condition, it is actually a net stock, and you can just buy it. Okay, without looking at the company fundamentals or financials, making any qualitative assessment. So just by this formula itself, you are able to make a decision whether to buy a stock or not. Okay, and Warren Buffett did a lot of this kind of investment, which he said it's akin to cigar butts. Okay, so he has this famous phrase we say that a cigar butt found on the street that has only one puff left in it may not offer much of a smoke, but the bargain purchase will make that puff all profit. So what he's trying to say is that the cigar butt stocks are not your kind of sexy, glamorous stocks that usually people buy. These stocks are very unloved, unfamiliar to most people, and they may even have a lot of problems, such as even going into bankruptcy. Okay, but in this case, because the share price is selling in such a ridiculous cheap price, you're still able to pay a fraction of what the entire net worth of the company is. So even if a company goes into liquidation, you are able to make a profit out of it. Okay, so he was beginning in his younger age buying all these kind of unloved stocks, very dirt cheap stocks, and he had a lot of successes. And it was only until that he became a victim of his own success, investing with so much returns, that he could not buy all these small companies anymore. And in the 1999 Business Week interview, he mentioned this. So he used to invest in mosquito stocks, which are essentially the small cap stocks. And eventually he has to invest in elephant stocks because his capital has grew so much. And in that sense, actually for an individual investor, most people wouldn't have this too much capital problem. And that is why he would recommend that people start with a mosquito kind of stocks. Because he said that in the same interview, if he had $1 million and he would invest in mosquito kind of stocks, the small cap, the net, the cigar butts, the unsexy ones. And he also added that he would be confident to achieve a 50% per annum return. Right? That's very unheard of. And not only that, he said that he can guarantee that he would achieve these kind of returns buying mosquito stocks or essentially the net stocks. So ladies and gentlemen, I believe that for most investors to start off with this kind of small cap stocks, net strategies make more sense by following what Warren Buffett has been doing in his younger days with lesser capital. Then if you want to copy him, which he has a billionaire status now, with very limited choices, he can only look at the bigger counters, which as an individual, you do not need to restrict yourself in that way. So I hope today's lesson would be able to give you some ideas how you can improve your investment going ahead.